I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show, and today is Monday, August 15th.
And this is the interest rate update.
We do this Monday through Friday. And, if you're new to the channel, be sure to subscribe, comment, and like. And remember, this is not financial advice. This is for informational purposes only.
That's right, folks. We are smart, but we are not accountants. We are not financial advisors. We are mortgage brokers.
Mortgage brokers. Okay, so what are we going to do? We're going to look at interest rates today. We see them, the 30-year fix, 4.875, the 15-year fix at 4.25.
The 30-year FHA, the same as last Friday, 4.375. 30-year VA, 4.375. So no change on FHA and VA.
These quotes are based off of these loan assumptions for conventional FHA and VA. So everyone's scenario is different, but these are real
scenarios.
Yeah, real scenarios. If you had a primary residence, your credit score was above 740, loan amount $400,000. Now, loan to value. Someone ever asked, what does that mean, loan to value?
LTV. What does LTV stand for?
Yeah.
Is that a car model?
So it's the
ratio.
As far as the ratio goes, but when someone says, I'm putting 25% down, that's the equivalent to a loan to value of
That's right.
75%.
What you're left with is a loan that is 75% of
Mhm.
that actual purchase price. Loan to value.
Yes, you take the 100, and then you just subtract your down payment, and that's what you're left with is that.
Where'd the 100 come from?
Oh, I see. 100% minus your down payment equals your loan to value.
Right. That's right.
But anyway, loan to value, 75%. These of course have no points, and a lot of folks out there, if I say lenders, I would say 9 out of 10 lenders, if they're quoting 4.875 today, they're going to be charging you $4,000 to $5,000 of extra fees.
Yeah, look at that fine print. There are standard closing costs. Like I tell all my borrowers, nothing in life is for free. Loans are not free either. And if a lender tells you they're free, guess what? There's something wrong, okay? So every loan has standard closing costs, but there's nothing extra. When we quote an interest rate, there's nothing extra. Extra means points.
So we're going to look at big picture here. The 30-year fix since 1971, just reminding everybody, interest rates were up at 18.3% in 1981, and then they started in this downward channel. And I said this channel, you see where these two red lines are going parallel all the way down. In parallel, that's the important piece. That's where we get this channel.
Yeah.
They just coming ricocheting up and down, up and down, up and down.
I like to call it the what would that be? That would be the interest rate slide from 1980. What year would that?
1986, yeah.
Okay, so from 1986 all the way until 6 months ago, 4 months ago, that interest rate slide. Look at that. Look how smooth that is. You put those two channels in there, and we've been on a path for lower interest rates for a long time.
So people, are always wondering where interest rates are going to be going. Are they going to continue to go up? A lot of people, and I'm kind of really believing that we hit the top of rates in June. I do think, again, that the interest rates hit the top, and then that we should see them. They'll probably hover around this range, but over the next 24 months, we should be lower again.
Kind of back
into this range, I would guess.
Kind of back down. Too much happened within, that 40-year-ish period in order for it not to go back.
Yeah.
Just say, oh, yeah, that was a 40-year run, and we'll never go back to it. There are just too many indicators that it's likely that we go back. Again, anything is possible, but, boy, we never run that long that looks like that.
Yeah.
Chances are we're going to go back into it.
And it just all comes back to the way our country has printed the money. I think people say, well, print money, print money. Every single time the House and Senate approve a bill to create extra funds for wars, recessions, et cetera, COVID added a ton of new debt.
That's right.
The interest, in order for our country to afford that debt, they have to lower rates.
Yeah,
and this is just over 40 years.
Right. Pretend the economy is an athlete. Lower interest rates is like getting a breathing machine at every break.
Yeah.
When you're used to getting that breathing machine, it's kind of hard to take the breathing machine off and just perform at standard, not par, that's too difficult, but just normal conditions. You need that oxygen. We need that lower interest rate. So we do think we are going to go back down.
So where you, if you're looking at a 4.875 today, don't be depressed about 4.875. It's a great rate historically. And I do think there's going to be a refinance opportunity in the future.
Right. And some people say, well, if we think there's going to be a refinance opportunity in the future, why don't I just wait? This is the reason why you don't wait, is because if things don't go down and they do continue to stay stable or go up, you're going to wish you could go back in time and do that refi. And by doing the refi, you're doing it again because you have no crystal ball. You have no idea what's in the future. But if you do that refi, we will chase that rate down. So if in 9 months or 12 months or 2 years it drops another 0.5%, we'll call you. Another 0.5%, we'll call you. Another 0.5%, we'll call you. That's how you do it because we don't have a crystal ball.
Yeah.
So.
Okay, so that wraps up our podcast. If you're, again, new to the channel, be sure to subscribe, comment, and like. We'll be back tomorrow with another interest rate update.
All right, thanks, folks.
Thank you, everyone, for watching our show today. If you have questions, be sure to email us at rates@azmortgagebrothers.com and be sure to take a look at all of our other videos on our channel.